Warmly welcome. Right now, our Ukraine friends are fighting for their freedom, but also for ours. And I'm very glad that all 27 countries and my colleagues stand together when it comes to supporting Ukraine. One thing that I thought was really just sad was that, or maybe I was quite disturbed actually, when I noticed that all economic institutions, we in politics and media, we described the Russian economy in a way that suited Putin quite well. And if that had been the truth, that had not been a problem, but it's also a war of propaganda, and that's very important to remember. It doesn't matter how we talk about the Russian economy, yes it does. First of all, sanctions work. So I'm just say we let the Swedish government I will soon give the floor to Torbjörn, who is a main speaker. We'll let them dig into the figures really and see what is happening in the Russian economy. First of all, it's a small economy and they do have problem. And why it's important to talk about? Yeah, but because if you're a soldier at the front or have your country starting to hesitate, should we continue to support and should we continue with sanctions? Is that really worth it? We say yes. And I'm very happy that Torbjörn Becker, who's a guest here, it's ECOFIN for the second time. I said that it's not so many professors coming to ECOFIN and comes from Stockholm Institute of Transition Economics. Sorry, this is Swedish. Tungvrikare. Anyway, so I will leave the floor to you. You came up with a report almost a year ago, and then a follow-up report now. We have just a couple of them here, but it still shows that the Russian economy is having problems. And I think it's important for us to know that, because I don't think anyone here or want to spread the narrative that Putin has. The floor is yours, Torbjörn.
Thank you, Elisabeth, and thank you for inviting me here and also asking us to do this report. I want to point out that I'm, of course, an economist, so I'm going to focus on that. I know there are lots of other questions related to Russia and Ukraine, and I will certainly not be able to answer a lot of them. But I want to start with just saying that we have to understand that economics is part of the war propaganda, that's for sure. This is not something we economists are used to, but this is certainly the case in what is going on now, which is also why it's important that we try to put things into perspective and not just buy into different narratives of, for example, the Russian economy doing great, the Russian economy growing this or that. We have to remember that this is part of this war that we're fighting against Russia as well, them telling us that we are weak and they are strong. I just want to remind all of us here that if you look at actual GDP numbers, the Russian economy compared to the EU countries' economy is 12% of our economies. So even if they grow maybe 1% or 2% extra per year, it's basically going to take them 100 years before their economy would be as big as our economy. So we should stop thinking about the importance of a single year's growth numbers and start to think about what are the really important issues here. And why is this particularly important now? Well, it's because a war is about the relative strength of two sides fighting in this war. And when Russia tries to tell us that Russia is strong, you are weak, that's clearly part of the propaganda, but it's not part of the facts that an economist can look at. So that's why it's important that we have these discussions about the actual realities of what it means to be strong in an economic sense. I just want to also highlight that Russia has, for as long as we can remember, and certainly since the breakup of the Soviet Union, been extremely dependent on what happens to the price that they're getting paid for oil and gas. Over the last 30 years or so, we could explain between 60 and 90% of Russia's GDP growth by what happens to international oil prices. Basically, if they go up, the Russian economy goes up. If oil prices go down, the Russian economy goes down. And then we can, of course, fiddle with different measures, etc. But this is still the really fundamental mechanism of how the Russian economy works. And this, of course, then later on will be part of when we think about what should we be doing at times like this. I also want to just mention that we don't actually know all of the numbers of the Russian economy today. They are not actually publishing the same amount of data that they used to do before the full-scale invasion. We are also not really able or certain about if the numbers that they do publish are the true numbers or if this is part of the war propaganda. And we have to remind ourselves also about that when we write about the Russian economy. One very prominent number that's being discussed is inflation, of course. Russia claims inflation is 9–10%. Why would they then have a policy rate of 21% at the central bank? You know, which regular central bank would have a policy rate that's basically 10 to 12 percentage points higher than the inflation rate? If any of our central bankers were doing something like that, they would be out of their job the next day. I can tell you that for sure. So to me, that's a very clear indication that inflation may not actually be the right number. And then, of course, if we know that inflation is what then is used to determine real GDP from nominal GDP, if you understate inflation, you will then overstate real GDP numbers. But again, you know, we cannot really be sure if this is real GDP being 0.5% higher or lower or up or down. But again, I think we have to take a step back and say that's not really what's important here and now. What is important, though, is that also an autocratic state has a budget constraint. A budget constraint can be affected both on the revenue side, how much money is basically the Russian war machine getting from selling oil and gas. That's the main income sources on the revenue side. On the cost side instead, we have all of the things that Russia cannot produce itself to do missiles and other high-tech things for the battlefield. So we can work on increasing the costs of these imports, and we can make it hard to even get the imports, and we can reduce the revenues and basically make the resource constraint tighter for the Russian war economy. On top of that, we can also note one particular fact, which is that fiscal numbers in Russia don't really correspond to what we think that they are putting into the war effort. This is because a lot of the financing of the war machine is going through the banking system as lending to the military-industrial complex. So if you add that to the fiscal numbers, their fiscal deficits would be ballpark twice as high as what they have shown in the official statistics. This is now building up financial risks in the banking system. They have experienced high credit growth. Because also of the very high interest rates, deposit growth is very strong. These are all indicators that we usually look at when we want to predict the banking crisis. Again, as we all know, economists are terrible in predicting if or when a banking crisis will happen, but we do have a pretty solid understanding of what are the risk factors associated with banking crisis. And we see that several of these risk indicators have been going up in Russia. It means that their financial system, their macroeconomic performance is under pressure, it's not in balance, risks are mounting, but it doesn't mean that we can sit back and relax. We still have to think about what more can we do when it comes to tighten this budget constraint, because that's what determines how much money and how much resources Russia has for waging this war. This, of course, comes back to the fact that we need the continued discussions about how can we limit further the incomes from oil. We certainly need the further discussion on how we can limit the incomes from gas sales to Europe. Europe is still a big customer of Russian gas. We need to think about if this is in our own interest. And then finally, since war is a fight between two parties and it's the relative strength that matters, we certainly have to combine our efforts on the sanctions area with support to Ukraine. It's a balance that we need to shift in the favor of Ukraine. And I just want, as a final reminder, to state what is pretty obvious, and it is, if we do not support Ukraine today, if Russia turns out to be successful, we will be spending 2 or 3 times what we're spending today on our own military for the foreseeable future. So the thing is that when we have these discussions about how costly or not support to Ukraine is, we have to put that also in perspective. What is the real alternative to supporting Ukraine? It's basically that we will have to massively increase our own military spending for a very long time if we don't do that. So I think I will stop here, and then I think Elisabeth will open the floor for questions.
Yeah, I will very soon. And just to summarize also the first and second report, as you say, high inflation. We don't really know about growth, but we know when we see like
nighttime light data.
Thank you very much. We see that things have happened between 21 and 2023 in Moscow, for example. Capital fight, inflation, and difficult will have to accompany that problem. So it's a lot of problem in the economy, and thank you for a very good summary and presentation of the Russian economy. We'll open the floor, and Sara will keep the mics.
Thank you. Jarno Hartikainen, Helsingin Sanomat. Mr. Becker, based on your report and your assessment, how would you assess Russia's ability to sustain, from an economic perspective, Russia's ability to sustain the war effort in Ukraine? Thank you.
We do them one at a time?
Let's start one at a time, and then we will
Okay.
see how
So basically, if we look at, if nothing changes, if Russia spends the same amount on the war, and basically nowadays they will have to use the reserve fund that they have, the National Wealth Fund, the liquid part of that fund is now below 3%. Their deficit, if oil prices continue to be at a similar level as today, they will certainly run out of these reserve funds within maybe a year. And nowadays we have to remember that Russia cannot really access any foreign capital to finance the war. Foreigners have left, the Russian government bond market some time ago, and they are not going to come back as long as this war continues, which means that they will have much stronger limits on what they can do. It doesn't mean that the war will have to end, but they can certainly not sustain it at this level for more than maybe a year.
Hi, thank you. Gloria Rodríguez Pina for El País newspaper. I have 2 questions, one for the minister and one for you. So for the minister, there is going to be, it's not related to economy, but there is going to be negotiations this week, apparently. The European Union is not invited, nor any other leader from individual countries. What do you think? Is Europe being left out again of the negotiation table? And then for you, Trump hinted at some point at putting pressure on oil prices, and since this is something that seems very important for Russian economy, do you think there is any way to put them down as to pressure Russian even further?
Can we take answer beside you?
Yes, hi. Mattia Bagnoli, ANSA, the National Italian News Agency. One of the things that we see in Russia now is the ability to produce a lot of the equipment that is needed at the battlefront internally. They are developing basically an almost entirely internal market. And secondly, what they produce, the cost factor is much less than the cost that we have, for instance, in Europe or in the US. So my first question is the assumption, what assumption can you make in terms of sustainability? Because this is, are you factoring in these cost differences? It is something that we should focus on, or it is a distraction? And secondly, the war effort has basically produced a distortion in the market. Now, so much of the economy is dependent on the war. So do you even foresee that there is now still sort of a handbrake on this? Because the more the war continues, the more the war economy progresses, and then is there a point where there is no coming back? Because then there is no civilian economy left, so to speak. And so the war effort becomes a self-fulfilling prophecy. Otherwise, the regime cannot sustain itself anymore.
So, very briefly first on the negotiation. I mean, the result is the most important, of course, and getting a good result in the end, and a peace on Ukraine's condition. And European leaders have, of course, been in contact and talked both to the Ukrainians and the Russians and the Americans. And I mean, so it's a bit coordinated, but the thing is, who will get a good peace for Ukraine? I'm not concerned if that's on where that person or that person come from. So I mean, European leader is involved in many ways, but this week it's other people getting there, they're coming there. Yeah.
Just quickly on putting down oil prices. Right now, the international market is lowering prices for us, so we don't really have to do much because this is happening. But of course, it's about having a price cap that is lowered, and then also linking that to how we deal with the shadow fleet. Those are the obvious two key components, but then also going further with the gas import limitations. Those are the absolutely central. So you can limit oil revenues, but you have to do it actively if the market doesn't just keep falling. But you know, if that happens, we're in a global recession. That's not so good news for most of us, I think. On the Russian production, there's a lot of discussion, of course, what Russia can produce or not by itself. It certainly cannot produce high-end microchips, which you need in more sophisticated weapon systems. They still import that. So that's something to definitely limit. We have seen reports that they are expanding capacity, some more traditional areas like doing, explosives and so on. I'm sure they can figure that out. They have been in that business for a long time. But the thing is that I don't think they can magically produce all of these things for free in the next year. So I still think that in terms of sustainability, they will need their incomes, or they're going to basically, like you were hinting at, choke the rest of the economy. Because, of course, you can take away the pensions from the old guys and they cannot complain because it's Russia. Or you can limit how many roads you build, etc., etc. But, it comes with a very heavy price. So unless they want to go down that route, I don't really think they can increase capacity without, limits, which is sometimes the message we get. And I don't think they can produce the more sophisticated things. So just one word on the purchasing power discussion when it comes to military production. Some people say that Russia has a cost advantage of 2-3 times Europe because it's cheap labor and so on. It's just that when you do the quality adjustment, some of our colleagues say, that cost advantage is down to 25-30% because you have to add the quality dimension. If you have 2 fighter jets, it doesn't matter if you send up 3 crappy fighter jets and get shot down by 1 very excellent one. So, when you make that adjustment, that sort of PPP military style becomes very different. But again, I'm not the military expert, so I think other people may have better answers to that.
Hi, Jan Struczewski from Reuters. Can you tell us more about the data you used for your report, the Russian data? You say it's not trustworthy, not fully at least. So which pieces of data did you use, and how do you compensate for the fact that it may be propaganda?
And to the mandate, yes.
Vitaly Sizov, UATV. How you assess the role of China, because you analyze just Russian economy, but if analyze this global China, Russia, maybe Northern Korea, Iran economy, how serious this influence and how this country could compensate for the losses of Russian economy? Thank you.
Okay, so data, of course, we do use the official statistics, but we try to put them in a little bit different perspective. So we show you the inflation numbers and the policy rate, and we say that this leads to a real interest rate that's not really what we think would be normal. So we use the data. We are very careful, and we say that, you know, we cannot be sure if this is true. Then when it comes to monetary statistics, we have the prices on you know, house price indexes in Moscow. I can just mention one thing. We used in the report in the fall the Romir alternative statistics for inflation. After our report was out and was discussed, Romir all of a sudden stopped publishing that alternative inflation number, and they even took it off the historical numbers from their webpage. We can both guess what's behind that. So, you know, again, we don't have a magic crystal ball so we can make up our own data, but we can look at the data they publish and discuss, does it look credible or not? So that's kind of the approach we take in this work.
Is that
Romir, it's in the previous report. If you look at our previous report, it's also in this one, but, you know, not featuring because we cannot update that series. But
before you continue, I just would add that, I mean, this is so important that you go into the figures and really question them, because, I mean, there are reasons for questioning it. But also, like, intelligence service around the world can also confirm some of the things that we read here. So, I mean, it's much closer to the truth than what the Russian president is telling us.
Thank you, Elisabeth. Yeah, so I mean, numbers is always about how you in the end tell the stories about these numbers. And so, you know, I think we can add that, but we cannot really produce our own numbers. That's when it comes to China, of course, we all know that most of the trade that Russia used to do with the West is now done with China. China supplies Russia with a lot of critical inputs to the war effort. So, yes, China is a crucial player. You can add North Korea, Iran, of course, to that picture. So I think from my perspective, we have been a bit soft in our discussions with China. The European economies, US, they are much more important to China's own economy than what Russia is. You know, we can understand that the whole geopolitics of it means that China and Russia are now sort of friends. But China cannot build its own growth strategy on trading with Russia. That would be a complete disaster. So if we made that clearer to China in some of our own discussions with China, I think that would be a very useful strategy for us.
Okay, maybe we could take a few more questions. Yes, Jennifer, and then...
Thank you so much. I'm Jennifer Rankin from The Guardian, and I wanted to ask about Russia's frozen assets. And first of all, to Mr. Becker, how have you taken these frozen assets into account, and have you done any modelling of what might happen if they were suddenly unfrozen, for example, if the EU sanctions regime lapsed at the end of July? And then to the Minister, could I get your opinion on what you think should happen to the Russian frozen assets? We have many people now, including the High Rep Kaja Kallas, calling for them to be used for the reconstruction of Ukraine.
Yes, Lorne Cook from the Associated Press. Trump's talking about these massive sanctions, these things that he's got up his sleeve, whereas you seem to have laid out quite a balanced process, you know, that we need to work on it in a fairly systematic and careful way. What do you see as the golden bullet, you know, the massive sanction, the thing will work? Do you see one at all? Thank you.
Yeah. When it comes to frozen assets, we've been pushing quite hard, and I worked very closely with former Minister of Finance in Canada, Chrystia Freeland on this issue. So many times when I've been in Washington, we talk to different ministers from many countries and about this question, because I think we need to go a step further. But of course, we need to also be united among our countries. But we are pushing for using more and using them in another way, not only the windfall, but also the assets as itself. Definitely so. Yeah, I mean, I think Ukraine is a good partner to talk to about that. What do they want? I mean, probably for rebuilding, but I mean, it can also be used for other things that Ukraine needs more. I mean, I think that's up to them, and I think that would be a good start.
Yeah, if I can just add, I think, if we were to send the whole amount of these frozen assets to Ukraine, they would have predictable long-term financing at the level that matters. They could then procure more of the weapons that they would like in the markets. I think that would be important. They would avoid any discussions about their own fiscal sustainability, exchange rate, etc. So from my point of view, we should definitely consider transferring all of the frozen assets to Ukraine sooner rather than later. This is not less important now with Trump in the White House, obviously. So unless European finance ministers think that they want to put in 200-300 billion extra to Ukraine, I think we should use these Russian assets to serve that purpose. And confidence and these things are extremely important for any economy, and I think for Ukraine it would be a very big deal. And there's good legal ground for doing it. There's been lots of papers written about countermeasures and how this actually complies with international laws. So Trump and the silver bullet. Trump has a lot of silver bullets that turn into something else when they're flying. I know pretty well, again, that if we can lower oil prices and gas revenues and put tighter sanctions on what they can import, that's great. I think Trump could usefully have discussions with China and India about what they are paying for and what they are exporting to Russia. That would be the added benefit of a Trump. The other thing that I haven't really discussed is additional sanctions on the financial system. If something ruins an economy pretty quickly, it's a banking crisis. So, I think the U.S. could put heavier sanctions on the financial system and their international transactions, making Chinese and Indians more afraid of dealing with Russia. That would be sort of the potential silver bullet from Trump.
Thank you so much, Valentina Vasilyeva, independent Belarusian media. Вот так. You mentioned that sanctions are very important, so for both of you, this is a question. What do you think European Union should do with Hungary and Slovakia, who would try maybe to put veto on prolongation of Russian sanctions, and who could be obstacle to adopt this regulation to refuse Russian gas and oil till 2027? Do you think that European Union finally should create any mechanism to avoid this veto?
It's a good question. I mean, first of all, this is one of the reasons I've been doing this and let Torbjörn and his friends writing these reports is showing all countries that sanction works and it's efficient. And we will probably get back to that question, as you mentioned, how can we all together stand on the same side. But I think so far we have done quite a lot and we can do more, and we are pushing for more, and like the Nordic Baltic countries is pushing also for price cap and on oil, and also when it comes to shadow fleet, and there is things is happening, but we will be back on that issue on the countries who really doesn't want as much as many of us want. I would like to say something.
No, I don't really have anything.
I will just add up and say that we will go back to the meeting in ECOFIN, and this is. I'm very proud and happy that Torbjörn is here. It's the second time in ECOFIN, and last time it was on the informal ECOFIN in Stockholm, where Chrystia Freeland, Sagamachenko, some of you may know, a good friend of mine, Minister of Finance in Ukraine, and Torbjörn was on the agenda. And that was a good discussion, and I think it will be a good discussion now also. It doesn't happen often that we have guests. So I'm very happy that the Polish presidency invited Torbjörn to talk about this very important report. So thank you all.
I think you may have had something to do with that.
Yeah, you think so?
thank
Yeah, I never know.